Good morning. This is Nathan David with Allendale's Morning Wake Up Call. Today is Monday, November 20th. We have seen some wild volatility here in the bean complex here in the overnight. Right now, corn and wheat steady to slightly lower, with the bean complex mixed, beans higher. Hopping into corn, it's down a tick right now to 485 in March, hanging out near the bottom end of that extended range and not too far away from that yearly low on the March contract that does come into play here at that 477 level. This is the time for us to be selling some corn, especially with South America's crop in the ground. We need, to see an increase of potentially more than just token business as they make it through the growing season here. If they get the timely rains, some of these premiums really, especially in the bean markets, may vanish, and the bottom from corn could potentially fall out as well if they do have nice production numbers down there. So we do have a condensed trading schedule this week, and today and tomorrow may be your best days in terms of volume heading into the holiday there on Thursday. So shifting gears to the beans, it was a wild ride to start the overnight session here, with beans printing a low of 1327 in January, pretty much right at the open. Argentina's election was cited as the main catalyst of this volatility, as the far right candidate did pull away and successfully win. After that low was printed, beans steadily jumped higher and remained higher here in the overnight, with us trading currently at around 13.45, up a nickel. So meal a little weaker, down around $5, but it has continued to defy those overbought conditions recently, with the issues that you're seeing over there in Argentina. So similarly to corn, this is the go zone for export sales. We need to see them now to hold and justify these bean prices moving forward. Quickly jumping over into livestock, you did have a cattle on feed report on Friday, which can be seen potentially as a little less bearish than maybe anticipated, as that placement number did come in a slight beat from the average trade expectations at 103.8%. However, the numbers are still inherently bearish given how tight we did think supplies were just at least a couple months ago. So, we'll see what cash does with this news, and ahead of the holiday, wouldn't be at all surprised to see showless numbers pick up this week or potentially next week as producers continue to be a little nervy here in this cattle market. Quickly jumping into the macros here, you got crude higher, up around $1.50 to start the week. Stocks slightly lower, and bond yields have gone up just a touch. This is your morning wake-up call, and make sure to tune in for Tuesday's wake-up call.